Damien from Entourage here, and today I'm going to take you through Lenders Mortgage Insurance, commonly known as LMI. We get this question a lot, what's my LMI going to be, without knowing all the details. So we really need to know the purchase price or the property value and the loan amount. And then every bank's going to be different from there. So today I'm going to use $750,000 as my property value. I'm going to take you through three different scenarios at 85, 88, and 93%. So the first one is going to be 85%. You can see that 637,500 over here is 85% of 750. So if I calculate this LMI button here, you will see the range of different lenders that we have on our panel and how it's all a little bit different, ranging from $8,000 up until, around $10,000. Just going to pick something in the middle here, Loan Market Go, and then save this to our funding calculator. So the mortgage insurance fee, you don't have to pay upfront. It can capitalize onto your loan. So you can see now that that loan amount of 637 has added the mortgage insurance of 8,814 to have an end loan amount of 646. So as a repayment, $8,000 in the scheme of things over 30 years, probably not going to break the bank too much. So if you don't have that whole 20% cash deposit, this is not a bad option to do it. Going to take this loan amount up now to $660,000 and look at what 88% look like. I've just got to remove that. So we calculate that now. Look, I find 88% a really good amount because it doesn't get too crazy. Once you get into the 90s, you'll see that it starts to really increase. So now you can see it's around $11,000 up into the 12s and 13s. So again, pick something in the middle, save that to the funding calc. And again, that $11,470 has been added to the loan. And you can see here that the base loan amount, which we worked out the mortgage insurance on, was 88%. The end loan amount, or the LVR, sorry, is 89.5%. So it's about 1.5% of the loan. So now we're going to really go into the 90s now, where things really get a bit high. I'll take that one away again. And look, I must put a claim out there that not all banks even go over 90% like this. So it's quite rare to go over 95% these days, and you can kind of see why. These mortgage insurance fees have really jumped up now to 20s and 30s. Now, if I pick someone like, I'll just pick Westpac here, it's $28,000, and you can see that end LVR is now going to be almost 97%. So look, whether you're an owner-occupier or investor, you're going to have restrictions at this kind of level. Sometimes banks do it maybe for existing customers, but it's really quite rare to go up to this level now. Anything higher is pretty much not doable anymore because banks want to have that little bit of equity in the house just in case things go wrong. So, if you were to pay $28,000, it's basically a risk fee that the bank's taking you on because you haven't had those savings. So there it is there. It's about 97%. And so the way that mortgage insurance is calculated is such a complex kind of formula. I was going to show you this as well. This is how we used to work it out before we had technology. You can kind of see that each dollar amount you have, so 0 to 300, 300 to 500, 500 to 750, 750 and so on. You have to go into this column if your loan amount was in this column. And then every percentage you can see gets a higher premium. So 82s, 85s into the 90s. And you can really see these, into the 90s now. It's 2.895% of the loan amount. And so that was how we used to calculate stamp duty. And you can just see the closer you are to 100, the more and more it's going to be. So mortgage insurance, it's not a simple thing. It does require assessment in most cases by the bank and then the actual mortgage insurance company, which is sometimes separate to the bank. So not only do you have to jump through the hoops of a bank to get approved, then you've also got to go through the mortgage insurance, their policy as well. And they are tough. So there's really no flexibility with mortgage insurers. You've got to fit into that box. If you don't, you won't be approved. So it's a helpful tool if you don't have the deposit to get into the property market. But look, you need to speak to your broker to see how much it is and how ways we can save you on it. All right. Thank you, guys. Hope that was informative, and we will talk soon.